people.
That was actually my next question. Where's the
Really,
culpability?
really smart people, intelligent, well-educated people. I know them, and I know some of their children, who said, I believe I can go and buy a house for $2.6 million, and it'll be worth $3 in 2 years just if I show up. And so in order for me to buy that $2.6 million house, I'm going to get this ARM at 2%. And by the time it comes due 3 years from now, I'll have built up my equity, et cetera, et cetera, et cetera, and will bail myself out. Well, the triple witching occurred. None of that happened. So it is a little bit of speculation on their part that got a lot of people in trouble. There are a lot of people, I don't buy the argument that everyone was duped. There are a lot of people who said, I'm going to treat this as an investment. I've seen 3 years in this marketplace
but
of
weren't the
everything
banks
going
there
up.
sort of making it easy for them?
No, the mortgage companies were,
well,
and mortgage brokers, countrywide.
I know it's important to you to make the distinction,
It's
but
a
you
very
understand.
important
Yes,
distinction.
I know, but you understand that to the average guy, you know, I'm not saying the banks are Mr. Potter, but you
Well,
know.
if I came to you and said, I'm going to give you $1 million at 2% for 4 years, and the prime's at 7,
Well,
hello,
yes.
something's going to change here. Okay, so if you don't ask the second and third question, there is some culpability on your part of not understanding. I know somebody in this room right now who I won't name, who has a teaser mortgage, who's saying, I think I better do something about that right away. And I'm saying, you better, because now you've got market rates which make sense to buy homes.
So you're saying it's time to start buying again?
I think it's time to be refinancing. Money's as cheap right now as it's been in a long time.
Isn't there a chance it could get even a little cheaper?
Well, I know, but greed will kill most people.
So it's the same cycle.
You're doing the reciprocal of what I'm talking about. You're trying to guess on the downside.
Well, then
when you can get 10-year money for under probably 5.5%.
So in a way, what you're
Pretty cheap.
saying is what the Fed is doing could be inspiring another version of what we'd already been through.
Well, they're already talking about maybe it's time for you to refinance your house. And
Make
of course,
us all
what they've
get
done
greedy
is
again and-
they've mitigated the risk on the ARMs. Because the prices are down. If you have a 3% ARM, it's not going to reprice at 6. It'll probably reprice at 4.8.
Yeah.
So they've mitigated that, and that's a real effect. I mean, that will have a positive effect, but it won't have that effect next week. Half of the ARMs reprice this year, so it's all during the year. So now, how that will have an effect, and whether that stops the fact that we still have too many homes on the market, and we have a construction industry that's in the dumpsky. I mean, I don't, what's going to happen there.
So let's bring it down to the street level here. I mean, because Washington is a unique market. I mean, it's probably unique in the country, isn't it?
One of 2 or 3 unique markets.
And
The cash flow of the government makes it very unique.
Well, that's what I mean. It has something that is, I guess, from a banker's point of view, it's almost a sure thing. You've got an employment base that is probably going to be there. You're not going to be like Detroit, where a whole industry could go down, or Pittsburgh, I mean, which I'm sure PNC knows well. But you've got people here who have job security more than most places. So how did this whole episode manifest itself here in its own unique way? Was there more home building here than in other places? Was there a more robust sense of being at the Thanksgiving feast? Or did you find the Washington market to be more conservative?
When I moved here 3 years ago, people were auctioning off their houses in the front yard for higher than the asking price. That's bizarre. And there were people here who didn't realize that was bizarre and who were caught up in that. It's like Dutch tulip bulbs in the 17th century. It was bizarre. So that was, for those of us from the outside who are in the risk-adjusted return business, that was an algorithm that you couldn't keep up. But what you've seen, how you've seen it practically manifest itself is speculative buildings have stopped. You don't go out and build a 20-story building anymore for condos or for offices, just on the theory somebody will fill it up.
Was it out of control?
It was not out of control. It probably was drawing in more capital and more speculation than was warranted. And frankly, it's adjusted pretty quickly. Condos that are unsold are now being treated as apartments. Condo financing started stopping from people like ourselves a year ago, because you could see that there was only so many people to fill up these buildings. Office space downtown, there's still lots of cranes and lots of office building going on downtown. It's pretty healthy. If you can draw concentric circles around Washington and go out about every 5 miles, it slows about every 5 miles. until you
But
get
we
out.
built so many houses.
You have a
out
lot of
there.
houses out there when you get out into Loudoun County, and when you get 30 miles out, there were a lot of people assuming that you were going to have 250,000 people every 5 years, which is what you were getting. That has slowed. That's not going to be automatic. So in the rings around
And
it,
that's because of other, that's not because of the government, that's because of other businesses.
that's because business has paused
yeah.
a little bit. It's gone from torrid to good,
Yeah.
and people forget that. It's
Well,
you know,
compared to torrid, good looks like
the
a
good is
decline.
still pretty good.
Yeah.
I mean, the economy around here is doing very well. It's just not sizzling.
Yeah.
So the pause in commercial space and the pause in shopping centers in Virginia and Maryland, the pause on second homes in the Eastern Shore, all of those things have slowed. Now, if you have all your eggs in one of those baskets, you are in a depression.
Yeah.
But if you are fairly well balanced, whether you're a business or an individual, and you didn't decide that the house at Rehoboth was where you were going to put your retirement, you're going to be okay. And everyone tends to forget too, the inventory of unsold homes will just fill up normally. It just takes a while. So you have, when it's off 25%, that's probably okay in the sense that the housing will fill the stock faster. The prices will adjust a bit. The developers may not make as much. The home builders may not make as much, but it all ultimately sort of equalizes itself.
The impact then of, we hear about a Starbucks having a bad go of it, and that they may downsize and rebuild themselves. The impact of all the Starbucks, all the national chains that have come into Washington, when they get jitters, how does that affect Washington?
Not much at all. This is a real estate town. Real estate, technology, and government.
Yeah.
That's most of the economy. When you take that out, the rest of it is just sort of addendum.
So
The
whatever,
people, the Starbucks, the McDonald's, the retailers, whatever your feeling is about a Walmart or something, the people like that are pretty intellectually nimble, and they'll adjust very quickly to that. They'll downsize, close, move around, et cetera, et cetera. They'll watch, they're very sophisticated about watching census tracts for what's happening to income, et cetera, and they'll just make all the adjustments. The retail business, if you're going to be a success in that anymore, you have to be very quick and very nimble.
well, then, just to bring it down to an example of where we are, Georgetown, which has been overrun with commercial development in the past 10 years, don't we risk then, when you get sort of all your commercial fronts in one basket, where you have so many chains, that they could decide, well, this is one market we're going to pull out of,
Yeah, sure.
and that you end up with
Yeah.
more empty.
Well, you could have empty storefronts.
If communities don't balance
Yeah, you have empty storefronts, and particularly in the retail soft goods business, the apparel business.
Yeah.
That's a high volume, low margin kind of business.
Isn't that one of the places people pull back
People
first?
pull back on discretionary spending on that. They pull back on automobiles, and they pull back on soft goods.
Right.
Clothing.
Exactly, what we're-
They really
right.
they'll pull back on that. So you'll watch people who deliver those things, from GE with appliances to the Gap, et cetera. You'll watch their earnings, and you can tell what people are doing with their spending. And you got to remember, the consumer is 80% of the economy.
Yeah.
So when they pull back, it has an effect on the owner of that business, but for the most part, that owner's halfway across the country.
Well,
Now, are they going to close their storefront? Could be, but
Could be.
so far, given within the district in particular, the demand for retail space is so high
Right.
that it fills up right away.
Now, it was interesting, one thing you said to me was that the commercial real estate prices are so high downtown that the retailers can't really afford it down there. That
Yeah, we
it's-
looked at putting a restaurant in our new building. You'd have a $40 hamburger. I mean, it's just, it's.
So what do you do about that? 'Cause
Well,
you
it's a
wanna
real, I think the city has a legitimate concern in that. The mayor has expressed that concern.
right here too, yeah.
That that we'll lose, well, there's several cities here, but let's assume within 6 blocks of Farragut Square,
Right.
that you'll lose the ability to have retail. Where do you get a prescription refilled, or
The
your shoes
hardware store,
shined,
the
or hardware store,
restaurant,
right?
yeah.
And it is a legitimate problem, and it's a problem which has been solved in other communities by some sort of mandatory sort of rent control, or some sort of mandatory zoning that so much has to be retail, et cetera, et cetera. The retail industry here does not have the clout